Good morning, traders. It is Tuesday, December the 31st, and taking a look at the charts this morning, we've got the S&P 500 futures. This is a 30-minute chart, and you can see here the trend indicator here. More or less, the green candles indicate we're in an uptrend. Orange candles indicate that we're getting mixed signals that the market could roll over. And again, we've had some good news. We've popped up into that holiday rally mode, and we're continuing back in a very strong uptrend. Now, that being said, I do feel as though we've had a very strong move up here. I think we're getting close to these potential short-term tops where we start to see the market have some type of consolidation and volatility where you could see a pop higher followed by a quick sell-off. So I do feel as though we're a little overextended here, and again, we're in very light volume going into the end of the year. If we actually just take a look at the S&P 500 futures, you can see that what we're looking at here is the 30-minute chart over the last more or less 10, 12 trading sessions. We had the news here with the quantitative easing. More or less, we're seeing price continue to run up as we go into the holiday season, and we're seeing volume completely dry up and become very light. So we're just seeing more or less continued bullish patterns. We're seeing a rally, bull flag, rally, bull flag, rally, bull flag. Again, light volume. Eventually, we're going to see this get stepped on, and we're going to see a sharp pullback. The main high volume support level is going to be down here. These blue price by volume bars. So key support will be back down to the 1780, 1770. A shorter term support zone will be down here. This previous consolidation at the 1800. Now, 1800 would act as a fairly good bounce level. It is a whole number. It's a whenever you get to an 1800, 1700, 1900, those type of numbers, they act as a strong support level if you're above it. If you're below it, it acts as resistance. So overall, 1800 could easily be touched in the coming week or so once we see some sellers and volume step back into the market. Now, remember, it does take volume to sell price down. Generally, you won't see volume fall on light volume. If it does, it'll be a minimal fall, and it'll be bought right back up again. You need to see strong volume in order to really pull price down. So when you go into the holiday season, when volume's light, the odds of a sell-off are very slim. Now let's just take a look at energies real quick. Here is the crude oil chart. You can see here, came up, hit that 100 century number. 100 is a whole number. It's also this breakdown zone. It's starting to head down again today, down about 0.5%. Overall, again, I pointed this out yesterday. We could see it easily bounce between this ceiling and floor, and more or less it's come up, hit the ceiling, could come right back down, hit the floor. Could form some type of bearish pattern or something. We'll see how it unfolds here, but overall, we're not looking to get involved just yet. We're looking for some type of proper setup. Overall, there really isn't a good setup in crude oil here. Now, taking a look at natural gas. Natural gas is down about 1% today. It had we're looking for a potential 3 surges to a high. Had a nice surge. It's had another nice surge. If we can get a sharp pullback here in the next day or so, and then see another strong surge to the upside, I think that could be more or less the top. Now we're starting to see a little bit of volatility. We're starting to see the price chop. That means there's a struggle between the bulls and the bears, and if it can push up to another new high, that could be a great opportunity eventually for it to have a sharp breakdown and actually have a pretty steep correction down to the 380 level or lower. Now, taking a look at the chart of bonds. Bonds have been more or less bouncing bottom here for a while, continuing to kind of grind their way out. Really not a whole lot of movement this morning in pre-market. It's, again, holiday season, light volume. Everything's just kind of drifting around with really no volume behind it. Again, if we look at the volume here, let me just pull up. You can just see the volume here on bonds. Pretty much everything is like this across the line. This is a holiday week. Volume is light. Whatever happens, you really just can't. You got to take it with a grain of salt. And I think we'll probably see bonds continue to chop around down in this lower range somewhere between here and down here for a little bit. But they could easily continue to grind a bit lower as the equities market drifts higher. Now, taking a look at precious metals, they are down again today. Here is the gold chart. Silver's down about 1%. Gold's relatively flat on the session. Still forming bearish patterns. It's nonstop. bear flags for gold. Again, we've had a strong move to the downside, had a bear flag form. It looks as though it's starting potentially another run to the downside. Now on a short-term basis, we've got a move down, a mini bear flag. Take this measured move, come somewhere down here right to this previous pivot low, and if it breaks those lows, we'll probably see some stops being run, and we could see prices continue to push even lower. Now looking at the chart of silver, here is the 4-hour chart of silver. Same thing. Silver is more or less a little bit more range bound. It seems to be more range bound than gold more times than not. When it does have a breakdown, percentage-wise, is a lot larger. Again, we're kind of chopping around in this range, and it's just kind of bleeding down again and coming down into this more or less lower bit of a support zone where previous bottoms have met. Now, if we take a look at the GDX real quick to see where gold miners are trading, again, bouncing bottom, very similar to gold and silver. And if they do break down, if we just go to the daily chart, we'll get a better visual of the bigger picture here. Even if we go to the weekly chart, actually, it's a pretty big bearish pattern for gold miners. Overall, this is a pattern here that I've pointed out is very similar to bonds. We've got overall a downtrend, that a topping pattern that formed here. You get volatility, we had a breakdown, a reaction high, and then we're getting into this sell-off mode. And we had a first bounce, and now we're getting this drag, this kind of last kind of bleed out over time, very similar to bonds. Eventually, this should put in a significant low here, and from there, we'll probably see the market rally up and have very minor corrections, and could just continue to rip all the way to the upside. And there's pretty good upside potential for the gold miners sector once it does put a bottom in. Now, keep in mind, some of the biggest drops happen just before the market reverses, so we still could see a massive a sell-off and washout low in miners. We could still see it in precious metals themselves, the physical metals. So I'm not looking to pick a bottom. I'm waiting to see a bottoming pattern form, and then get involved and jump on the trade so that the momentum is in our favor the entire way. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.